While everyone was screaming Bitcoin is dead for the 100th time, BlackRock, the most powerful asset manager on planet Earth with $10 trillion under management, quietly launched a Bitcoin ETF. JP Morgan, the same bank that called Bitcoin a fraud, is now processing Bitcoin transactions for clients. And countries that banned it, they're reconsidering. Something massive is happening, and if you're not paying attention, you're already behind. Welcome to the channel, and if you're new here, hit that subscribe button right now because over the next 7 days, we're breaking down the entire crypto revolution, starting today with the one asset that started it all, Bitcoin. By the end of these 22 minutes, you'll understand exactly why Bitcoin isn't just surviving. It's becoming the foundation of a new global financial system. You'll see why institutions that laughed at it are now betting billions on it, and why even after every crash, every ban, every wave of FUD, Bitcoin comes back stronger every single time. This isn't hype, this is pattern recognition. And quick disclaimer before we go further, this isn't financial advice. This is education. Make your own decisions, do your own research, and never invest more than you can afford to lose. Now let's get into it. Hey everyone, welcome back to the channel. Today we're starting strong with a topic that refuses to die, because it shouldn't. Let's get into why Bitcoin still matters, and why even after halvings, crashes, FUD cycles, government bans, ETF approvals, and macro storms, Bitcoin continues to rise from the ashes stronger than ever. By the end of this episode, you'll understand exactly what makes Bitcoin different from every other crypto, why institutions are suddenly obsessed with it, and what role it plays in the future of global finance. And I promise, by the end of these 22 minutes, you'll never look at Bitcoin the same way again. But before we dive in, quick reminder, this isn't financial advice. This is education. Make your own decisions. Do your own research, and never invest more than you can afford to lose. Now let's get into it. Let's start with facts, not hype. Over $1.6 trillion in transaction value moves through Bitcoin yearly. Over 19.7 million BTC are already mined, leaving less than 1.3 million BTC forever. 24 countries now classify BTC as legal, regulated, or taxable property. Spot Bitcoin ETFs now hold billions in institutional inflows. Bitcoin is no longer a niche digital currency. It has evolved into a macro asset, a store of value, a hedge against irresponsible monetary policy, and a globally recognized digital commodity. Even banks who once mocked Bitcoin now offer custody services. BlackRock, the world's largest asset manager with over $10 trillion in assets under management, literally created a Bitcoin ETF. Fidelity, one of the largest financial services firms in the world, now offers Bitcoin custody. JP Morgan, which once called Bitcoin a fraud, now has a blockchain division and processes Bitcoin transactions for clients. Institutional adoption is no longer coming. It's here. But here's what's even more interesting. The Bitcoin network now processes an average of 300,000 to 500,000 transactions per day. The hash rate, which measures the computational power securing the network, has reached all-time highs of over 500 exahashes per second. To put that in perspective, that's more computing power than the top 500 supercomputers in the world combined, all dedicated to securing one network. The Lightning Network, Bitcoin's Layer 2 scaling solution, now has over 5,000 BTC in capacity and enables near-instant transactions, with fees measured in fractions of a cent. This isn't theoretical anymore. People are using Bitcoin to send money across borders in seconds, not days. One of the reasons Bitcoin still matters is the same reason gold mattered for 5,000 plus years. Scarcity plus predictability does not equal inflation. Bitcoin is the only digital asset with a fixed supply of 21 million, a predictable issuance schedule, a halving mechanism that tightens supply every 4 years, and no CEO, no company, no central authority. Let's break this down. Every approximately 210,000 blocks, which is roughly every 4 years, Bitcoin's block reward is cut in half. Historically, EH halving led to a supply shock, increased scarcity, and major multi-year bull cycles. 2012 led to the 2013 bull market, where Bitcoin went from $12 to over $1,000. 2016 led to the 2017 bull market, where Bitcoin went from $650 to nearly $20,000. 2020 led to the 2021 bull market, where Bitcoin went from $8,000 to $69,000. 2024 to 2025, a new cycle is forming. And here's the part most people forget. No country, no millionaire, no corporation, nobody can change Bitcoin's supply. That is unprecedented in human history. Think about every other asset class. Gold, new mines can be discovered, asteroid mining could flood the market. Real estate, they're literally making more land through land reclamation. Stocks, companies issue more shares. Currencies, governments print more money. But Bitcoin, the code is law. The supply cap is immutable. Even if every government on Earth agreed to change it, they couldn't, because Bitcoin is decentralized across hundreds of thousands of nodes worldwide. You'd need to convince every single participant to run different software, which will never happen. Currently, only about 900 BTC are mined per day. After the next halving, that drops to 450, then 225, then 112.5. By the year 2140, the last Bitcoin will be mined, and that's it, forever. Meanwhile, demand is growing. More people, more institutions, more countries are adopting Bitcoin every year. Fixed supply, growing demand. You don't need to be an economist to understand what happens to price in that scenario. A lot of people say Bitcoin isn't gold. They're right. Bitcoin is better than gold in almost every property that gives gold value. Let's compare them. Scarcity. Gold is limited, but supply is discovered gradually. Bitcoin? Fixed forever. Portability? Gold is hard to move and expensive to transport. Bitcoin? Instant global transfer. Divisibility. Gold is limited to physical constraints. Bitcoin? Infinitely divisible with 100 million satoshis per BTC. Security. Gold can be seized and requires physical storage. Bitcoin? Self-custody is possible with private keys. Transparency. Gold has an unknown total supply. Bitcoin? Fully auditable on blockchain. Verification. Gold requires experts and equipment. Bitcoin? Anyone can verify authenticity. This doesn't mean Bitcoin replaces gold. It means Bitcoin modernizes gold for the digital age. Gold has an $18 trillion market cap. Bitcoin is currently around $1.3 trillion. If Bitcoin captures even 10% of gold's market share as a store of value, we're looking at significant appreciation from current levels, which is why major banks are now shifting from the Bitcoin is a bubble narrative to completely different statements. JP Morgan now says Bitcoin is emerging as a long-term store of value. Bloomberg calls it digital gold. BlackRock describes it as a legitimate alternative investment. When the world's biggest money managers flip their stance, you know something structural changed. These aren't crypto enthusiasts. These are risk-averse, heavily regulated institutions with trillions of dollars and massive legal teams. They wouldn't touch Bitcoin unless they believed it had fundamental value and staying power. Let's talk about money. Specifically, why Bitcoin exists in the first place. Since 1971, when the USD left the gold standard, inflation became permanent. Money printing became a tool. Debt became a feature, not a bug. Savings lost value over time, and inequality widened globally. Here are the numbers. The U.S. money supply, M2, has increased from about $600 billion in 1971 to over $21 trillion today. That's a 35 times increase. Meanwhile, wages haven't kept pace. What your grandparents could buy with $100 in 1971 now costs over $700. During the COVID-19 pandemic alone, the U.S. Federal Reserve printed approximately 40% of all dollars ever created in just 2 years. Other central banks did the same. The European Central Bank, the Bank of Japan, the Bank of England, all printing unprecedented amounts. And what happens when you print money? Inflation, asset price inflation. The rich get richer because they own assets that appreciate. The poor get poorer because their wages and savings lose purchasing power. Bitcoin was created as the antidote. No printing, no manipulation, no surprise inflation, no political influence. It's not that Bitcoin is perfect, it's that the current financial system is fundamentally flawed. Bitcoin is the hedge, not against capitalism, but against unchecked monetary expansion. Look at countries like Argentina, Turkey, Lebanon, Venezuela, Zimbabwe, where currency devaluation destroyed savings. In these countries, Bitcoin adoption is exploding. Why? Because when your local currency loses 50% of its value in a year, suddenly a volatile asset like Bitcoin looks like stability. In Argentina, Bitcoin trading volumes surged during peso devaluation. In Turkey, when the lira collapsed, Bitcoin trading hit record highs. In Nigeria, despite a government ban, peer-to-peer Bitcoin trading became one of the highest in the world. Bitcoin gives people an exit option, a way to opt out of a failing monetary system, and that option becomes more valuable every year. In the last decade, Bitcoin evolved from internet money to a global monetary network. Here's how. First, the Lightning Network enables instant Bitcoin transactions with almost zero fees. You can now send Bitcoin faster and cheaper than using a credit card. Coffee shops, online merchants, and even some countries are integrating Lightning payments. Second, institutional custody. Banks now support secure BTC storage. Coinbase Custody holds billions in Bitcoin for institutions. Fidelity Digital Assets provides custody services. Even traditional banks like BNY Mellon are entering the space. Third, sovereign adoption. El Salvador uses Bitcoin as legal tender. They've built Bitcoin City, issue Bitcoin bonds, and stack BTC in their treasury. The Central African Republic briefly adopted it. Other countries are watching closely. Fourth, corporate treasury integration. Companies like MicroStrategy hold over 190,000 BTC, worth billions, as a reserve asset. Tesla held Bitcoin on its balance sheet. Block, formerly Square, allocates a percentage of profits to BTC purchases. Why? Because they believe it's a better store of value than holding cash that depreciates. Fifth, ETF infrastructure. Traditional finance now offers Bitcoin exposure to anyone. In January 2024, the SEC approved spot Bitcoin ETFs. Within weeks, they attracted billions in inflows. Investors who would never touch a crypto exchange can now buy Bitcoin through their regular brokerage account alongside stocks and bonds. Sixth, mining goes institutional. Bitcoin mining is now a multi-billion-dollar industry. Public mining companies trade on NASDAQ. Marathon Digital, Riot Platforms, CleanSpark. These are large-scale operations with thousands of machines, renewable energy contracts, and professional management. Bitcoin isn't just a token. It's a multi-layered financial infrastructure with global momentum. Layer by layer, use case by use case, it's being woven into the fabric of the global financial system. Bitcoin has dropped 80% plus multiple times, from $20,000 to $3,000, from $69,000 to $16,000. Each time, the headlines scream, Bitcoin is dead, yet each time it forms a higher low and a higher high. Why? Because each crash shakes out greed, speculation, leverage, and short-term tourists. But what remains is long-term holders, stronger infrastructure, smarter investors, better regulation, and institutional interest. Crashes prune the noise. The asset keeps the fundamentals. Look at the data. After every bear market, Bitcoin's network fundamentals improve. More nodes, higher hash rate, more development, better infrastructure, clearer regulations, and more institutional adoption. The 2018 bear market gave us institutional custody solutions and regulatory clarity in major jurisdictions. The 2022 bear market cleared out over-leveraged players and bad actors like FTX, while strengthening the case for regulated, transparent products like ETFs. Every crash is a stress test, and Bitcoin passes every time. The network has 100% uptime since 2009. No downtime, no bailouts, no central point of failure. Banks collapse. Companies go bankrupt. Governments default on debt. But Bitcoin keeps running 24/7, block after block. And here's the interesting part. Each cycle brings a new wave of adopters who weren't there before. 2017 brought retail investors, 2021 brought tech companies and early institutions. 2024 to 2025 is bringing pension funds, sovereign wealth funds, and traditional finance giants. Bitcoin benefits from the strongest network effect in crypto. The more people use it, the more valuable and secure it becomes. Think about it. Bitcoin has the largest developer community, the most infrastructure, the deepest liquidity, the widest recognition, and the longest track record. No other crypto comes close. When MasterCard wants to integrate crypto payments, they choose Bitcoin. When countries consider crypto adoption, they look at Bitcoin first. When institutional investors allocate to digital assets, Bitcoin gets the largest share, typically 70 to 80% of crypto portfolios. This network effect creates a moat. Every exchange lists Bitcoin. Every wallet supports it. Every crypto service starts with Bitcoin. It's the reserve currency of crypto and increasingly viewed as the digital reserve asset of the global economy. One of the biggest changes in recent years is regulatory acceptance. In 2017, governments didn't know what to do with Bitcoin. Some banned it, some ignored it, some tried to regulate it like currency or security or property. No one agreed. But now, regulatory clarity is emerging. The US SEC approved Bitcoin ETFs. The EU has comprehensive crypto regulations called MiCA. Switzerland recognizes Bitcoin as an asset class. Japan has clear licensing for crypto exchanges. Singapore has a regulated crypto framework. Hong Kong is opening up to crypto ETFs. The UK is developing comprehensive regulations. Even countries that initially banned Bitcoin are reconsidering. China banned it multiple times, yet Bitcoin survived and the network didn't stop. This proved an important point. Bitcoin is truly decentralized and censorship resistant. Regulatory clarity is bullish because it removes uncertainty. When institutions know the rules, they can participate. When banks know they won't face penalties, they can offer services. When countries have tax frameworks, businesses can build. We're transitioning from is Bitcoin legal to how do we integrate Bitcoin into our existing financial system? That's a massive shift. Let's address the elephant in the room. Bitcoin has critics, and some criticisms are valid. Let's tackle them honestly. Bitcoin uses too much energy. Bitcoin's energy consumption is transparent and increasingly renewable. Over 50% of Bitcoin mining now uses renewable energy. Meanwhile, the traditional banking system, with its buildings, ATMs, armored cars, data centers, and employee commutes, uses far more energy but isn't as transparent about it. Bitcoin is too volatile to be currency. That's true today, but volatility decreases with market maturity and adoption. The dollar was volatile in its early years too. As Bitcoin's market cap grows and liquidity deepens, volatility naturally decreases. We've already seen this trend over the past decade. Bitcoin is used for crime. Less than 1% of Bitcoin transactions are linked to illicit activity, according to blockchain analysis firms. Cash is used far more for crime. In fact, Bitcoin's transparency makes it easier to track criminals than cash. Bitcoin has no intrinsic value. Neither does the dollar since 1971. Value is subjective. Bitcoin has value because it's scarce, secure, decentralized, and people agree it has value. That's how money has always worked. Governments will ban it. Some have tried. It doesn't work. Bitcoin is decentralized across 200 plus countries. You'd need global coordination to stop it, which is impossible. And as more countries adopt it, banning becomes politically and economically costly. Criticisms are important, but they haven't stopped Bitcoin's growth. If anything, Bitcoin has addressed criticisms over time and emerged stronger. Here's the big question. Does Bitcoin still matter in 2025 and beyond? Absolutely, and even more than before. Because the world is entering an era of digital transformation where everything is moving online, rising government debt at over $300 trillion globally, currency instability with inflation, devaluation, and capital controls, institutional adoption where trillions in traditional finance are seeking alternatives, tokenized assets where the future of finance is on blockchain, and AI-driven global markets with algorithmic trading, smart contracts, and automated finance. And in that future, assets that are limited, secure, immutable, borderless, programmable, and verifiable become extremely valuable. Bitcoin is the foundation layer of that new digital financial world. It's the most secure, most decentralized, most battle-tested blockchain. While other cryptos experiment with features, Bitcoin perfects one thing, being sound money. Think about the macro picture. Global debt is unsustainable. Inflation is persistent. Geopolitical tensions are rising. Trust in institutions is declining. In this environment, a neutral, apolitical, decentralized monetary network becomes invaluable. Bitcoin doesn't care about your politics, your nationality, your credit score, or your identity. It's permissionless. Anyone with internet access can use it. That's powerful in a world of increasing financial surveillance and control. Global adoption metrics are accelerating. Over 420 million people worldwide own or have owned Bitcoin. Over 15,000 Bitcoin ATMs globally, accepted by thousands of merchants worldwide. Integrated into payment systems like PayPal, Venmo, and Cash App. Traded on every major exchange in every country. And this is just the beginning. We're still in the early adoption phase. If Bitcoin reaches the adoption level of the internet or smartphones, we're looking at billions of users in the coming decades. So, why does Bitcoin still matter? Because Bitcoin is the first digital asset with absolute scarcity, a hedge against inflation and monetary manipulation, a modern form of digital gold, a global financial network with 100% uptime since 2009, a macro asset recognized by institutions, a technological breakthrough in decentralized systems, an exit option from failing financial systems, the foundation layer of the digital economy. Bitcoin isn't a trend, it's a technological milestone, the same way the internet was in the 90s. People doubted the internet too. They said it was a fad, that it would never replace traditional systems. But the internet wasn't about replacing everything overnight. It was about building infrastructure for a new digital age. Bitcoin is the same. It's building the infrastructure for a new financial age. And just like the internet, it's not going away. The question isn't whether Bitcoin matters. The question is, are you paying attention? Thank you for watching today's episode. Tomorrow we continue our 7-day journey with Day 2, AI coins and the future of decentralized intelligence. Make sure you subscribe, hit that notification bell, and drop a comment below with your thoughts on Bitcoin's future. I'll see you in the next one.